Okay, I was gonna do like a countdown, but looks like I'm already live, so I don't need to do that. Or will I? Ooh. Okay, so now I don't know if you can hear that, but it is a 10-second dance party, so all right, good 10-second dance party. Okay, I wanted to talk today about rates and home prices because rates and home prices have an inverse connection with each other. And I think most people just don't understand that. So here's what I want to talk about today. I'm going to add well, let me give you some background to this. So I keep talking to people that are waiting and waiting and waiting for the market to come down, and we have had a decrease in home prices in the last 8 months. We are about 14.5% lower than we were in June of last year. Now that's median home price. This is for single family homes in Salt Lake City, or Salt Lake County, excuse me. So, so one of the things that I keep talking to people about, and they keep saying, well, I just want to wait. I just want to wait. I just want to wait. And I want to show you what happens when you are waiting for home prices to come down when interest rates are increasing. So I've just got a little chart here that I put together. Now, a lot of people, I know I helped a lot of buyers buy homes last year, and they were buying homes. Let's say it was $500,000. It was a 3% interest rate. So their monthly payment, and this is just principal and interest, their monthly payment was $2,108. Now, we have since had a large drop in house prices, right? So now a 14.5% decline would mean that the house they bought for $500 is now $427,500. Now, most people are going to look at that and they're going to say, wow, that's great. I'm getting such a deal. But what they're not paying attention to is that the interest rates have tripled or have doubled. So now if you're paying for this 14.5% less house price, but you're paying a 6% interest rate, you're actually paying $455 more a month than you were if you had bought your house last year when interest rates were still at 3%. See how that works? So let's say that the market hasn't completely gone to the bottom. Let's say that the market has another 10% to go. So the market has another 10% decline, but interest rates are continuing to rise, right? The Fed has announced that they are going to continue raising rates until they see inflation shrink down to the 2% level. So, so let's say, great, like now we have another 10% decline. Now that $500,000 house in 2022 is now a $384,750 house, right? So a lot of people think, yes, I'm getting it so much cheaper, but let's look at the interest rate. So if the interest rate is 8%, which it most likely will be sometime soon, then now you're paying $260 more than you were paying when the interest rate, when it was a higher price, 10% higher, but a lower interest rate. So you're now paying $2,823 for a house that's worth $384,750. See, that's the biggest thing you need to understand, is that the interest rates are driving what people can pay for a house, because you don't buy a house based on the purchase price. I know that doesn't sound right, but think about it. You buy a house based on what the mortgage payment is every month, because that's how you can understand if you can afford this house, right? So if you could afford a house at $500,000 because you're only paying $2,108. Now it's a much cheaper house, right? That's over 25% less. Well, I guess close to 25% less. But now you're paying a total of $455 plus $260. So now you're paying, what is that, like you're paying a little over $700 more a month to get a house that's worth a fourth less than if you would have bought at the 3% rate. So that's the most important thing you can remember right now, it is important to remember that now is the time to buy. We've had a decrease in prices, but we've doubled our interest rates. Now, if interest rates continue to go up, and all indicators point that they will continue to go up in the next year and the couple years ahead of us, then now is the best time to buy a house, not because the price of the house is going to go down or because you're getting this amazing deal on the house. Get the house that you want, pay the interest rate now. Now, if interest rates go down, then great. What happens? Interest rates go down, house prices go up, right? So if that happens, then you just refinance your mortgage, but don't sit on the sidelines waiting for Armageddon to come, because even if prices continue to go down, you are paying more every single month because of the interest rate. So that is something that is a little counterintuitive to people, because what most people focus on is just the price of the home. And what you really need to be considering is, what's the impact on your lifestyle based on the payment that you're going to make every month? That's what you should be focusing on right now. So if you have questions on how to get pre-qualified for a mortgage, I have some great mortgage partners. If you have questions on how to get started on buying your next home, I am happy to help you with that. I hope you find that useful. And if you have any questions, please reach out. Thanks.